You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out with the option block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of hilarity. Mix it all together, and you have the option block. My name is Mark Longo from theoptionsinsider.com, as well as from the old network. And, of course, you guys can join us many different ways. If you'd like to join us live, it's every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. You can always just stream anything you want from the website or indeed from the mobile app, or just subscribe on your device of choice via your iTunes, your Pocket Cast, all that fun stuff. Then you can sit back and relax and let our options flow come to you. There's a lot of it, so be prepared for some flow. But as long as you can handle that, then we got you covered. Of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do like to hear from you guys. If I sound a little bit different, it's because I'm coming to you from our southern studio these days. I'll be down here for the next couple of weeks, so we're not beaming to you from Chicago. Going to sound a little bit different, but hoping to keep the show schedule pretty much on top of things for you guys out there, so not much change in your neck of the woods, with the exception, of course, of late last week, where we had to bump some option block and some vol view stuff. You should have got some content coming your way. I do indeed. If it was a little noisy, not our fault. We were at a very noisy event, a.k.a. the Pro Trader Summit. Those people like to make some noise, so hopefully some of it at least was audible for you guys out there. All right, and joining me on the old program today, we got the usual cast of characters. First off, joining me, he's back now, listeners. He came to the bright lights of the big city. He was blinded by them. Now he's back in the hinterlands of Maine. At least I think so. We are joined by the Rock Lobster and Mr. Andrew Giovinazzi. Sir, how was your trip back to the big city?
It was good, relatively uneventful, and all of my clients, spending the evenings having cocktails, talking about trading, creating new trade, everything. It was really good. Great time. Great. Just a really great event. We really like our clients. It's a fun time. So, you saw that the shenanigans starting to get going there at Gibson's, which is of course a place where many shenanigans have started in the past for people. So, a good night. But I'm back. I'm in Maine. It's about 78 degrees. It's a little funky balmy, and we're starting to get a little rain, a little funky thunderstorm.
There you go. We'll keep our fingers crossed down here in the southern studios, because we know, as indeed for our TWIFO program, that the weather can change at any moment. And a lot of times the second I flip this live switch is when the weather decides to change. So looking good right now, looking nice and cloudy, but we are pushing 4 p.m. Eastern. That is the storm window here in Central Florida, listeners. So we'll see. Hopefully the Skype gods will continue to smile upon us. And also joining us from parts unknown, a.k.a. St. Charles. I guess we do know him. It is Uncle Mike Tussaw of St. Charles Wealth Management. Uncle Mike, welcome back to the show. How goes the new moniker, sir?
Loving life. Always happy to be here, and happy for Andrew that he got out of that city and is back in the beautiful hinterlands.
Yeah, it was strange to see him in the big city. He was like a man fish out of water, quite literally. In fact, I do believe for part of the big event on Wednesday, he was stuck on Michigan Avenue. He could not figure out a way to get off of Michigan Avenue, so it was very intimidating to him. So hopefully,
I've been stuck on that street myself.
hopefully, I'm glad he figured it out, and could also find his way back to Maine while we find our way over to the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is indeed the portion of the show where we break down what was going on, what was trading, what was catching our eye in today's market activity. Kind of a bit of a weird one here as we wrap up the session. Most of the major indices kind of leaning to the dark side for most of the day, but not a ton. Third of a quarter of a percentage point, so somewhere in that range. Ending out the day somewhere in that range as well. Pretty much all three of the major indices pretty much around the same ballpark percentage-wise to the downside. A little bit of that downside means VIX cash getting a bit of life, getting a bit of love, about a third of a point, right around 12.35. So staying north of the 12 handle. As some people repeating to me today about the VIX on a 10-day high, and I was like, 10-day high, that doesn't really. That's a really modest frame of reference you have there for what constitutes a high, what constitutes news. Got as high as 1374 intraday, so we did have a little bit of love earlier in the session. Again, there was a lot of dire news coming out over the weekend. Again, kind of proving there is some literal weekend risk still in these markets. We had the exacerbation of the trade war, China vowing to retaliate, enacting some tariffs of their own. A lot of other news coming out there. Probably would have sent us spiraling downward if the markets had been open. So a good thing, calmer, cooler heads could prevail here by the time the trading session started here this week. So a lot of interesting stuff, even though most of the latter portion of the day was kind of spent hovering around this same slight downside area here. Uncle Mike, we'll start with you, sir. What was catching your eye in this bit of a mixed bag today on the street, sir?
Well, I think it's like you said, there was the literal weekend risk with which we had. If you look at what was going on within the pre-market, we were down a lot lower than where we were. If you just took a snapshot of the actual chart of the market from the time of the cash open until the time of the close, it looks like we were up like gangbusters. But it was just making up for a lot of lost ground. With SPY, we did dip below the 275 mark briefly in the first few minutes of trading. We got to 274.95, but then we had a pretty impressive rally throughout the rest of the day in that we ended up finishing back at the 276 half mark. So considering where it was looking at the beginning of the day, we rallied roughly 15 points on the S&P or $1.50 in SPY, depending depending on what you look at. And I agree. I think that had the markets been open over the weekend with a lot of the trade talks, then things might not have been quite as worked out quite as well as they did. The other thing to keep in mind with a lot of this is that hedging for weekend risk, we talk about that on the show all the time, or I know I have many times in the strategy block. The other thing to consider is that on the weekend, yes, a lot of bad things can happen. And it looked like this weekend could have gone that way. It did not. But the thing to always keep in mind is that people who trade on the weekends or start trading on the Sunday nights, you're not going to get quite the same volume. So you don't know if that rally or that sell-off is going to continue going into Monday. So that's the other thing to keep in mind when you have something like this. In terms of the sectors of what was moving, the main thing that I noticed, not so much today, but mostly on Friday, was just the downturn that was happening in the metals. Silver got beat up pretty bad on Friday, gave up a lot of the gains with which it had going into Friday, and I think a lot of that was on the tariff talk. In terms of the sectors today, we didn't really have anything that was extremely major to the downside. The ones that really were there, though, XLP, the consumer staple sector, along with healthcare, those were down just under 1.5% and just under 1% respectively. And on that, we did have some gains in the energy sector. XLE is up a percentage point. And it appears that is probably the one that really helped the market the most, in terms of keeping it to where it really didn't go down too much, so to speak. So we did have a little bit of a rally there and the slippery stuff. But then aside from that, really did not have a whole lot of big movers and shakers, at least in any of the individual names with which I follow.
Yeah, the metals taking it on the chin recently, of course, as a result of all things tariffs. Talk a bit about that on TWIFO, even though I don't think this week we had a chance to get into the metals. Shows how much there was actually on the docket when it came to equities and ags and crude and just about everything else, and even crypto. We were talking about quite a bit on the show this week. So a lot of things fighting for dominance when we're doing the TWIFO show every week. Metals not making it on the cut this week, which is surprising. That doesn't happen too often. What made your own personal cut there, Mr. Rock Lobster? What was catching your attention? What was lighting up the crazies? By the way, I talked to your crazies at the big Option Pit event last week, and I said, do you guys mind when I call you crazies? And they're all like, no, we are crazy. So they're on board with my terminology there, Mr. Rock Lobster.
Catching our eye, one, besides kind of the metals falling apart, actually one of our presenters on Tuesday, I believe it was, no, Wednesday, that was one of his big calls. We're going to be putting out a product of his pretty soon. It's a kind of a realized vol indicator. It's pretty cool. But anyway, that's what he was setting up for. What is catching my eye? How about that new low in the July VIX future? $13.61. There's a buck of premium in that with actually, okay, that's okay. It's closing $1.30 in premium. So light. VXX trading at getting back down into that level at the beginning that we saw at the beginning of the year, the low 30s. I'm just going to say they're not crushing vol hard. The weekend effect was kind of a mix. But, market down, vol down. I guess the SPY is trying to fight its way back up. But just mostly those things that I look at. As far as, I think we're just becoming immune. Sort of this is whatever the next leg is on the tariff worries, I guess you could say. And that's really all that's what I saw. It was kind of a snoozy day. The other thing that's catching our eye is Square. We have the Dorsey pair on fire again. Square up another $1.70. I don't know really why. Very cheap premium. We are going to look at it again, our gold class tonight. Twitter premium is just in the toilet, and it's a $46 stock now. So I personally am thrilled about that. So both of those, I think, are starting to catch a little fire. And then, of course, we'll have to talk about Tesla when we talk about all the puts that people keep buying in it.
We'll see. If this thing continues to rally, we'll see the put buyers have been kind of somewhat persistent, regardless of where the underlying is moving of late. We'll see if this continued rally and Musk's continued claims to break all the short sellers out there is going to be enough to break the put buyers out there. By the way, Mr. Rock Lobster, we need an update. We need a zone alert here for VIX. Where are we living right now in VIX zone land, sir?
We have finally crossed into the top of zone one. So for all of you home gamers, I have 4 zones. And VIX spends approximately 25% of its time in each zone. So anyway, but this has been the part this year that has been the stickiest, actually kind of dropping into the low end of the vol curve and then staying here. It just has had a hard time doing this. So I put on a little bouncy trade in our vol newsletter today. It's actually up some pretty decent money already today. But this is kind of where, okay, the futures are definitely I think they're saying like an 11 VIX cash within the week. I think there's a couple of geopolitical things. They sort of turn out okay, and we're going to get that number, albeit new news. But that's the way the tea leaves look like they're running at this current time.
So you have zones within zones for your VIX zones, sir.
Well, what's important with the VIX zones is you do have zones within zones because you have up and down. But that's all. It almost sounds like, what was that book for? A brief history of time. Well, I'm not that much of a genius. There's all this, like, there's something within a box within, and you open that box and there's another thing. So I think you break down the vol products a lot. You understand how they work and operate, and everything is easier if you try to fight all of the natural inclinations of all the products and options in general. I think it's a much harder road. It's a harder road to hoe. So anyway, we'll see what happens this week. But as of right now, the vol futures are soft, but they also, for this point in the cycle, they're about as low as they can get without VIX cash having to do something fairly drastic at this point. And I mean, 50 cents, 80 cents, 90 cents, which, on a relative basis for VIX at this point is a pretty big number because we're down to 12. So
50 cents. I don't know if you heard, but he's back, sir. He's back in the VIX. Breaking news. 50 cent alert.
50 cent is back. Well, what's funny is I think they bought the high tick last week. Doesn't mean they can't be right down the road, but they could have paid less than 50 cent this week. So
I think at one point, to be fair to him, I think he did pay 49 cents at one point. So there you go. Calling him 50 cents is a deep insult to him, sir.
Exactly. I'm quite sure they must have some other short juice against that that's much larger, but
one would hope.
You would think so. I mean, generally you buy that junk and you set up kind of an explosion play, and let's see what happens. So we'll it certainly could happen.
Could. And it's interesting out there. You were talking about your VIX zones there, sir. Oh, it's so easy to handle all the social media here while we're here in the Southern studio. There we go. That's better. That actually looks like something legible. There we go. All right. But you mentioned things that are kind of crazy, and VIX zones certainly are crazy. Another thing that has been crazy of late, we talked about this a lot. If you listen to our audio coming out of the OIC conference, I know a lot of you folks did. We put out a ton of it, so it was kind of inescapable, including a lot of my sit-downs with the heads of the exchanges and a lot of the other firms and OCC and others. One of the common refrains was liquidity and the kind of lack thereof. And so what can we do as an industry and options market to try to address that? And quite frankly, there aren't as many market makers as there used to be. We talked about that many times. Andrew, Mark, myself, a bunch of guests on their show all have the title of former ahead of our market maker status. So no longer actively out there making markets, which is the case for most of them out there. One of the reasons so few firms are left doing it is because of the issues, and a lot of our guests talked about this, with what are the bank capital rules. Now, stay with me for a second. Kind of a dry subject. Oh, my God, bank capital. Oh, that's so dry. And yeah, I'm with you. It is. But on the flip side, this is one of the reasons why when you guys write to us saying, why are these stupid spreads so wide? This is one of the reasons. The capital requirements for market makers out there in terms of how much money they had to set aside to offset their positions and deposit with their clearing firms and others and with these banks has been onerous, and they're not even doing things like taking into account offsetting positions. So if you have two positions that offset each other, they wouldn't even take those into account. They would make you require, maximum hedging, maximum margin for both positions, which is obviously an inefficient use of capital, to say the least. Well, just this week, the House Committee on Financial Services, courtesy of the Illinois rep Randy Hultgren, who I do believe attended the conference down there in OIC and how the industry has been working with quite a bit. He's been receptive. Go figure. The Illinois rep has been somewhat receptive to this conversation. They passed some reform for this. Again,
he's from St. Charles. That's why.
Is he actually from St. Charles? Well, there you go. So maybe Uncle Mike, maybe you're a little bit your glad handing, and a few of those Skippy Zeros actually got the job done. What do you think?
Must be the case.
I think Skippy Zeros can really do anything. I think when you put it down to it, Skippy Zeros could solve the Mideast peace. They could solve Syria. They could solve the oil crash. All these issues are facing right now. Global warming. Skippy Zeros are there to save the day. Now, before you get too excited, this is pretty much just past committee, so it's got to go out into the full House and the full Senate. And we all know what happens when those things happen. They get watered down. They get appended to other bills as riders and all this other nonsense. So this is not happening yet, but it's taken the first step. It escaped committee, so that's a good thing. And hopefully this will, and again, even if it does pass as written, it requires 360 days for the banking regulators to come up with a new rule for it. So they don't really propose a new rule per se. They effectively said you have about a year to come up with a better way to do this. Requires them to consider a number of items, including available liquidity. I like this, the economic value of delta weighting. That's something I'm sure a lot of senators and representatives have never seen before in legislation. Netting of positions and a bunch of other things. So hopefully this is at least a sound first step. Mr. Rock Lobster, does this give you hope that someday we'll see those markets tighten up a little bit in some of those more esoteric names?
I certainly would like to see it, but until you add liquidity to the marketplace and make it, and this is part of the thing with financial regulation. You have to be careful how you regulate it, because the big guys always can afford to pay the bills like that. It's the little guys that have to deal with, they don't have, the mega compliance departments and all this stuff. And really making it, and this is just shows you sometimes where the regulators, I don't think, understand the business that they're regulating, because with the OCC, you have third-party clearing, which I strongly believe every over-counter the derivative that trades should be cleared by an OCC-like party to avoid the financial crisis, because that way everybody knows what's under everybody's skirt, which was really most of the problem with the financial crisis. All of a sudden, it's like, everybody needs to borrow a little money right now. And it wasn't that they didn't have any money, just there was no faith in anybody. So everything just locks up. With this right now, as far as like creating a reasonable margin requirement, like not offsetting positions, charging a ton of money for short contracts, which that part obviously I'm fine with, but you're making it unnecessarily onerous when you're really not looking into the big picture. So, I mean, the OCC cleared contracts are actually the easiest things to regulate. And, my own little propeller hat theory about that is they like to regulate the things that are easy, right? It's like reg show and shorting stocks. It's an easy thing to regulate. It doesn't really do any harm to the financial system, and people get huge fines for just, shorting stock. It's not, if they don't have the underlying in place, which is, ultimately like zero damage to the financial system, that kind of stuff. It's like this. They sort of regulate the self-regulating bodies where the compliance and the risk control is pretty tight anyway. Nothing compared to some of the banks and, AIG being able to write $1 trillion worth of notional contracts. So, I would prefer if they spent their time actually looking to where the potential problems are instead of where the problems are not. I mean, you didn't hear any problems with anything happening in OCC regulated contracts, right? During the financial crisis. Those guys make sure everybody pays their bills. So, I know they're trying to do the right thing, but I think it's much better that they should be talking to some people that, clearing firms and stuff like that actually might be able to help them craft stuff that, makes sense. So anyway, there you go. I was a little bit, that was just Andrew's soapbox.
I got you.
I think it added no value to the show.
I got you on your libertarian soapbox, sir. First you're getting all crazy squeezy on me with VIX futures. Now you're getting all crazy libertarian on me. But, that is a good point. It's kind of the old analogy, right, that the cop at the speed trap, he catches the guy he can catch, not the guy in the 200-mile-an-hour Ferrari who's blowing by him. That he has no chance of catching, right? But the guy who's going 85 in a Corolla, he can get that guy. So you see, the guy's not really doing a lot of damage to the system. Same thing with I think your analogy there is an apt one. Meanwhile, we got to keep on rolling, listeners. It's time. Are those mystery Tesla puts trading again? Let's see what else we got on our radar today, because it is time for the odd block. And you know what? We're missing the odd block VO here in the Southern studio, so we'll have to get that to you on another time. We'll just pretend, listeners, that we heard that live. You guys listening after the fact, you heard a great little intro there, so congratulations to you. Maybe a little boon for the podcast listeners there. As we keep on rolling into the odd block, the portion of the show where we break down the weird, the wild, the wonderful paper, sometimes the head-scratching paper that is lighting it up. And we start, as always, as Andrew alluded to earlier, with our old friends, the mystery Tesla puts. Tesla's been on a freaking tear. I think that's a technical term for it of late. Closing today, nearly $371, up almost $70-odd just in the last few weeks here, blowing through the 300 handle that it blew through not that long ago to the downside. as Musk has been talking up a good game against a lot of these short sellers, also buying up some more of his own stock. That also tends to do the deal for him as well, up another 3.5% today. And so with all this upside, you think people would be dialing back on the mystery puts. Not so much, listeners. Today, the Jan 2019 50s doing nearly 1,000 contracts, 800 and change out there today. They're a wee bit less than they used to be. Remember, they pushed $3 at one point here. Today, going out right around 75 cents. 57,500 open still on this strike, listeners. So a lot of people playing here. Also about 450 going up on the Jan 2019 20 puts. These trading for about 17 cents here. So I guess if you want your cheap flyer on very, very near-term immediate bankruptcy of Tesla, these bad boys are lighting it up. Enough paper here. It almost could have been maybe a little bit of a 1x2 here. 2 of the 50s for 1 of the 20s. Would be a funky 1x2, but I've seen funkier, about 10,000 open on the Jan 2019 20s. Yes, now let's go out a little bit farther to the Jan 2020 listeners. And when we do that, we find that they were fairly active today as well. I mean, these are a little bit lighter, usually in general, but still decent activity out here today. The Jan 2020 50 puts doing about 250 today. These things are trading 360 at 370. So surprisingly tight for a far out of the money 2 year and a half and change put out there. Almost 20,000 open on this strike, about 19.5. Then we got about 400 and change of the Jan 2020 20 puts. Say that 5 times fast. These things trading for about $1.05. 10,500 on the tape there, total open interest. So these puts still active, Mr. Rock Lobster, despite the fact that Tesla continues to rally. So the only thing I can assume, Mr. Rock Lobster, is that you guys at Carmen Line continue to buy them. Am I correct?
Yes, I think we are 80% of the open interest now in those puts.
Are you catching fallen knives all the way down, sir?
Yeah. It's so strange. Like 3 weeks ago, we looked at this. I'm like, wow, the borrow's like 1%. It got up to 1% per month for Tesla. I'm assuming that the borrow is a lot higher now. I have to go look. I actually can compute it right now, to be honest. But we are not buying them. It does not surprise me somebody's buying them. I am 100% convinced now it's somebody that owns bonds or CDS, and which means that they can probably pay an enormous amount of money because I'm selling this. I'm sure they're selling the CDS stuff for way, way, way more. So that generally is the trend of how that stuff works. So it would not surprise me in the slightest.
Just goes to show you, Mr. Rock Lobster, we're in the wrong business. We should be out there pumping CDSs on names like Tesla. That's where the juice is. That's clearly where the juice is, sir. We have missed our calling. Instead, we have to move on to other names, like Lobster alluded to it. A lot of action out here in the cloud storage and payments space. So let's get to the first one here. Dropbox, very active in the cloud storage. And, of course, rally ho mode today, up about 7%. Actually, ending up 7% intraday, closing the day up about 6%, or about $2.40. Closing right around $42 even. So a good day for a good old Dropbox, ticker symbol DBX. This one does about 8,000 contracts a day. Today doing over 50,000, almost equal 1-to-1 puts over calls, which is kind of interesting given the fact that we saw such an upside bias in the underlying here. Good day for the Dropbox believers. And what did we see out here? What was the big trade here? Kind of lighting up the tape, 50,000. So you had a lot of action across the strikes. And as I mentioned, you had an equal bias to puts and calls, even though the biggest trade we saw today wasn't someone coming in and scooping up some near-term upside. Nope, it was someone blasting out 1,300 of the Jan. Again, this strike is the strike everybody loves. Tesla, I don't care what name it is. The Jan 2020 20 puts. Blasting out 1,300 of these bad boys for $1.25. Remember, I said, listeners, it went out today, $42. So someone, I guess, feeling a little comfortable in selling out those puts. This is all opening. The open interest pretty nominal on this strike. And, when we talked about these kind of trades before, this is a longer term one. This is 2020. So this guy, even if he likes this yield, he's going to be waiting some time. So when we talk about these trades, we always counsel you to keep in mind it's not free money. you do have to put aside capital against these. And so he's tying up his capital for a year and a half or so. So hopefully he likes it. Looking back, clearly it seems like he does. Going back to the chart here on Dropbox. Remember, the chart for Dropbox doesn't run back. Where am I? Here we go. Let's get out there. It goes back, a whopping all the way back to March of this year. And over that time, we've seen it pretty much kicking around $30 until the last few sessions, when all of a sudden it went on a tear to where it is today, up to about 42. So a lot of love here on the upside. Mr. Rock Lobster, what are you thinking about these downside puts? And it looks like also you did a little quick back of the napkin math. You got a little Tesla borrow info. If you want to share that with us as well, sir, go ahead.
Yeah, the borrow info for Tesla it's only about 50 cents for the first 30 days, which is not a lot. So 50 cents on a $367 stock as a percentage is pretty darn low. So there's definitely a little hard to borrow cost in there. I think right now it's officially hard to borrow on Thinkorswim. So there's that little borrow cost. So as a little, as a little trading tip, you watch that borrow cost and see if it starts to jump, because that's when the squeeze is coming. When they start charging the liquidity providers more to short the stock, or actually not just liquidity providers, but everybody. So it's there. It hasn't changed a whole lot in about 3 weeks. I thought it actually would be a little higher, to be honest, with the $70 rally. So it is quite possible there has been some covering, which has taken some of the pressure off with the stock up so much higher. Believe me, that could be shorts covering. I don't know. I think this is near an all-time high. So it's kind of at a funky point. So to me, this is, again, you're like, oh, Andrew, it's poised to move. But really, the more it's really like a spring just being compressed at this point. And at some point it is going to blow up somehow. So if you're that put seller that's, loves selling those 365 puts, be careful. And if you hate it and you're selling the 380 calls, be careful. You could see some substantial movement on this. So anyway, it's now officially on my radar. I've been actually trying to put a position on it for like 3 weeks, but I keep chickening out because the pricing just never gets good enough. Every option is so darn expensive. But of course I missed out on about $50 of upside. So anyway, that's where it is. Oh, Dropbox. Dropbox, for the second part of this question, are you feeling maybe light in the sandy type of put on this one?
It seems that way. A little bit longer term than we usually see, but it seems that way.
I mean, from a yield point of view, that's $1.25 on $20. What's that? So that's a 2018 put. So the yield is not bad. $1.25 for a put that's $20 out of the money. What is that? 5%, something like that. Because $10 would be a 50%. So yeah, like a little better than 5% till January. It's kind of it's a yield play overall, I think. So it's not the worst line in the sand sale we've ever seen. I got to be honest with you. We've seen them a lot tighter for a lot less money.
No, I think I said Jan 2020, but what I meant was they're January. They expire on the 20th. They expire on the 20th, which I hate that nomenclature. We really need to, as an industry.
It's not the Jan 2018. Okay,
yes.
Okay, hold on. All right. Sorry about that.
2019, yeah.
Okay, so the yield on it's like piffle for that long. But I guess it is a way to buy the stock. But I mean, it's going out that long. It was the Jan 2018s. Yeah, the 20s are only 25 cents. So, it's a way to do it. I don't know if it's a great use of capital when the market's doing this, that, or the other thing, but it is a use of capital, I guess. It could be a corporate buyback thing too, as well. Maybe they need to buy back stock for options exercises and stuff. So it's possible. Well, if you're Dropbox and somebody's exercising calls that were $20, you pretty much can write all the 20 puts you want because you don't have the obligation if the stock goes below 20. So, it's it's not exactly free money, but it's kind of free money. So it's better than nothing, I guess.
Yeah, if you're locked up from down there, you may not be as concerned about it. Speaking of efficient and interesting uses of capital, we're going to move on to our next name here. If I could pull it up here we go. It's not a name. I don't think we've ever actually talked about it on the Odd Block before. So an Odd Block newcomer. It's one of those ones you look at and you say, oh, these guys are still around. They've been around forever. Kind of a quiet little business gorging themselves on people who can't afford to pay for appliances. This is Rent-A-Center. They instead charge you just exorbitant weekly rates to rent them instead for 5x or 10x the value. Well, clearly some firms saw some value in that business model. Vintage Capital today coming in saying they're going to pay $15 a share for Rent-A-Center, which went public back in '95, by the way. Deal expected to close by the end of the year. The stock came in right around $12 today. So as you might imagine, it was rally-ho out there in Rent-A-Center. The stock closing up a little bit shy of that deal price level, I think around the 1460 or so. If I can get there we go. I get my screens to comply with me here. 1468, up about 22% on the day. Ticker symbol RCII, by the way, listeners, if you're not familiar with it. I'm sure a lot of you aren't. It's probably not on your regular watch list. It's a name that actually does fairly decent paper, about 6,000 contracts a day. And we talk about names that do 200-300 in here, so that's pretty decent. Today doing 37,000, about 9-to-1 calls over puts. That's usually the kind of bias we expect in a name like this that's in rally-ho mode, not quite the 1-to-1 we were just talking about before with Dropbox. And what do we see? Kind of some funky paper here, Mr. Rock Lobster. When we started off the day, with a name like this that's in rally-ho mode, you might think, well, people are loving themselves some calls. And that is what we saw. But it wasn't quite just the straight-up call, out-of-the-money call buying palooza that we normally see in a name like this. Certainly there was some of that. But the big trade of the day, actually, was what started off as what looks like a 1x2, Mr. Rock Lobster, and maybe a pretty savvy one at that. Talking about efficient uses of capital. Someone coming in and blasting out 3,500 of the SEP 11s for $370. It looks like coming back in and buying 2x, so 7,000 of the SEP 13s for $1.80. So doing the whole thing for actually a dime credit, which is not bad if you're going to get a little bit of a pop. And, of course, this is for September. Give themselves some time. Clearly, if you expect the deal to go out at $15, this could be a decent trade. As the day went on, though, more paper came in, Mr. Rock Lobster. It makes me wonder about this trade a little bit, because it ended up, I said it was about 7,000 by 3,500, but as the day finished up, we saw about 7,000 and change of the SEP 11s go up total too. So there were some delayed blocks of SEP 11s coming in later, many hours later, actually. Like we saw another 2,000 come in a couple of hours later. So if someone was doing an initial 1x2, I doubt they would leg in a couple of hours later with 2,000 more to the short side of the SEP 11s. Yeah, that's kind of what we saw. So a little bit weird paper. They ended up going out about 1-to-1, Mr. Rock Lobster. But the time differential between the trades was pretty extensive, a couple hours, I believe. So it's not the kind of thing, it's just a late print went up 5 minutes later. No, it went up hours later. So kind of a weird one there. 1-to-1 also makes sense, and maybe not selling this spread, but certainly buying it would make sense 1-to-1. Selling a 1-to-1 call spread when the name is in the announced merger that day, that's fairly aggressive. I don't know if I would do it for what are these levels here? Doing it for about $1.80, $1.90 or so. I don't know. I guess that's a pretty hard fade to this deal going through, Mr. Rock Lobster. But either way, I don't know. What are your feels on this one? Actually, let's pull up the chart before we do that, Mr. Rock Lobster. Let's see exactly what we got here on Rent-A-Center. Again, not a name that we've checked in with very often. Let's go out for a full year, please. Thank you. There we go. All right. Back a year ago, it was, about 1150. So about 3 handles shy of where it is right now, and pretty much where it went in this morning. Opened, got as low as about 735 back in March of this year. So it saw some nice lows, and then, of course, had a nice little pop recently with the announcement of this deal. And hovering right around, or very close to, not quite at, but close to, it's 52. Actually, no, it's above those now, because the 13 high was a little bit lower where it is now. So at a 52-week high right now. We'll see it, Mr. Rock Lobster. What's your take on this spread? If it goes up, first off, if it goes up the way it initially looked like, selling one, buying two, kind of makes a little bit of sense. The later paper on the 11s, a couple hours later, is kind of head-scratching, unless maybe this guy inspired more paper to come in. But those guys looked like the latter paper was also selling, which makes it kind of weird as well. What's your spidey sense telling you, sir?
I'm trying to think that this is some odd way to play the takeover arb. So you think of it like this: the spread is the 13.11, right? So if you're trading 180 and 370, your max risk on it is a dime, right? Plus, well, I'll restate that. Your max risk on the trade, if it's 1-to-1, is a dime. So the way it's set up, they have 3,500 extra long SEP 13 calls, right? But if the deal goes away and the stock goes back to where it came from, let's call it, $11. I think they would make a little bit. They would do okay. They would make money on the 1x2. Not a lot though, right? Because they're doing it for even money. So this as a strategy is they're trying to buy extra SEP 13 calls for a kick higher. And it looks like maybe they legged into selling some SEP 11s against it to maybe try to do a little bit better. But they do the 1x2 370 over 180 kind of as a no gain 1x2, but they have 3,500 of the September 13 calls they can sell. So if they get a pop, if they can sell something against it, they have the calls to sell because their downside on the spread 3,500 times is only really a dime because it's 180 over 370. It's a $2 spread going for 190, so you can't really lose more than that. So it could be that they kind of bought those extra calls to try to give themselves some leverage. It's basically, it's not a free call, but because it is costing a dime, but it's not actually they're getting a dime credit for it. So actually it could be a semi-free way to buy those 13 calls and then leg out of them over time or sell something against them against the deal price, because that's how I would look at that as a trade. So it could be worth something. But it's kind of a hold till the deal is done sort of trade and sell options against it. So it's I'm trying not to make it sound complicated, but I think that is a trade where you have to leg out of those other 3,500 calls to really see any money on the whole thing. Yeah,
you're definitely in it for a while. And if this trade goes south, you're right. It doesn't. I like it better 1x2 than I do 1-to-1. That's for sure.
Because where are you going 1-to-1?
Yeah, that doesn't make a heck of a lot of sense to me yet. The paper came in a lot later, so 1-to-1 pretty much. So weird stuff afoot out there, but I do like it kind of 1x2. It's interesting take, gives himself till September. I kind of like this one. This is interesting at the very least. Looks like he got some decent fills, and later on that spread was kind of marked against him a little bit. Went out. Actually, if he's going to take it off now, it'd be a 50-cent debit. So probably wants to wait a little bit on that one. But still, interesting stuff here on the 1x2. I think we're going to mark this in the to be watched category as we mark this whole deal to be. Whenever we see a big deal like this, listeners, we're always going to keep an eye on it to see exactly what comes to pass. Let's see, the closer this stock gets to 15, that's when the market's buying into this deal. That's actually happening. We shall see. Meanwhile, we're going to wrap things up here with another name. It's probably been a while since we talked about this one. This is Pioneer Natural Resources, ticker symbol PXD, closing today shy of 185, 184.60, up fractionally on the day. So a slight upside day for a good old PXD. It's a name that does about 3,400 contracts a day. Today doing a little bit shy of 8x that, right around 22.5 in terms of total action. And all that's about 19,000, 18,000 of it coming in the puts, 4,000 in the calls, 4.5 to 1 puts over calls. But what caught our eye, ironically enough, wasn't a huge ton of puts. It was what looks like to be at least an opening, the bullish risk reversal out here in PXD, and a pretty interesting one from a size perspective. Again, looking at this name, this one closed 184.60. So someone kind of coming around to the outside of that, doing the Jan 155 220 risk reversal, selling the put 2,000 times for 1386. Buying the call, 2,000 times for 2231. So, Mr. Rock Lobster, you're not going to like this. This one has a bit of an outlay, actually a pretty sizable outlay to it. Interesting stuff. But someone wants this sucker to rally and rally hard, opening on both strikes, I should add, there, listener. So no closing out here on this name. Let's go look at the year that's been out here in good old PXD, because I like myself a nice bullish risk reversal. Not so sure I like this one yet, but I do like myself in general, the concept of a nice bullish risk reversal. This one today, opening up a year ago, right around 158. So on a nice bit of rally since then. And then right now hovering, right around near the upper band of this, but not quite at it. Looking at about, looks like got as high as about 210 not that long ago, and coming off that a bit again. So Mr. Rock Lobster, 220. It hasn't hit that in the last year or so, but maybe that's not too crazy. Certainly, if it rockets back up to that level, this spread will be looking pretty good, regardless of whether it's in the money or not. So I know you're a fan of a nice bullish risk reversal as well. I know you probably don't like the outlay on this one too much, but I know you like to sell the put and then kind of wait for the call. That's your preferred MO. But what's your take here on this optimistic risk reversal here in PXD?
Well, $11. I guess it's cheaper than. See, here's the thing: you got to pay $11, and then the margin is still, you've got the all-in put margin for 155. So, I mean, it's a little less because it's only 155 instead of 184. PXD at 10% a year going out to Jan 17, 2020 is, I think it has a reasonable shot to make money if you want to be long. I mean, it is, just like what basic, I can't remember, are they natural gas or oil? I can never quite remember with this company. But it's, can I do the arithmetic? 22 from 13. That would be 9. Anyway, so the 52-week low is 125. It's trading 184. So I think they're trying to pick, a price that doesn't look too bad relative to the lows of the year. It's basically a long stock play that's costing you less money than buying the stock right now. That's what I would say. Not a whole lot less, but somewhat less. And it would give you, depending on how you're allowed to margin it. So it has potential, but it's not a whole, I don't think you're really using the option leverage if you have to pay. You are saving some money, just not a ton, because you still have to pay the margin on the short 155.
I knew you love that one. I knew that would be up your alley. A $9 outlay or $8.50, whatever the heck it is. That one's going to leave a little bit of a stick in your craw. I don't think you're buying that call if you're that guy.
Do you see? I don't see as much leverage on it now. It is possible at $11. You're spending, because it's a lot more margin than $11. Because geez, you're still paying the margin on 155. So that's always like with the risk reversal. I feel like the market has to give me a little benefit instead of just going out and buy the stock and say screw it, because you still got the margin consideration. But
I like it.
I could see 10% a month, 2019, 2020, or 10% a year. At least on the value of the call, there's enough time so they could definitely make some decent money on the whole thing. But at this point, you're just grabbing your calculator and see what's going to generate a slightly better benefit for you.
And we're also grabbing our calculator. See how much time we got left to squeeze in a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You wonder what happened to the strategy block? Moving things around a little bit again. Uncle Mike's schedule always evolving. We try to accommodate him. So Strat Block moving back to Thursdays. Mail Block back to Mondays. Last week, a lot of you guys chiming in, liking your straddle question. We asked you guys, let's look at some weekly at-the-money straddles expiring on the 22nd. So later this week here, we said, gun to your head. I know you guys like to sell premium. We made you buy it. We made you do it again this week too. So don't worry. Premium sellers, you'll get your love next week. Don't get your knickers in a twist. We asked you guys, which at the money straddle would you rather buy? We gave you 4 choices. At the time, the Tesla straddle is around $22. That one seems to have worked out all right. Spoiler alert. Facebook was $3. SPY straddle was right around $3.60. GLD was right around $1.60. 42% of you saying Tesla is your go-to, with 25% saying, Facebook. No love for GLD or SPY, both up much less than that. So given the moves you saw on Tesla, I can't really fault you for loving yourselves some straddle. This week we thought we'd get a little bit more entertaining, quote unquote. We thought we'd look at some fun, weird names in the entertainment realm. We said the same thing. Gun to your head. Which of these July straddles would you rather own? We gave you 4 choices. The old WWE. I didn't know this one was even public till a few months ago, but they're apparently on a tear. WWE has more than doubled in the past few months. So if you haven't paid attention to that stock, I guess you missed out like myself. Lighten it up. They're July at the money straddle. We're going July, so we're going about 60 or so. Or about going to July straddle out here. So just for frame of reference for how long we got here, about $7 on that July at the money straddle for WWE. WYNN casinos and gaming out there. They're at the money straddle for July, about $12. Seas, which is of course SeaWorld, the much maligned SeaWorld, only $2. So keep an eye on that one. The lack of no Shamu premium built in there anymore. And Disney taking on the chin again today. I believe they got downgraded with about $5 they're pricing in, which is a little bit, right around 5%. They're right around $100 out there in Disney. I think they're around 107 today, so a little bit shy of 5%. All the premium sellers chiming in. At Theta Seller, I wonder what he wants, saying, can't we just sell an All the Money Strangle instead? Don't worry. We'll give you guys premium selling next week. Another person, Trader Ray, something coming in. Trying to decide which would be worse, placing an at-the-money straddle when long options are overpriced or getting shot in the head. So premium sellers are pretty committed to the cause, shall we say. I'm reminded of our old buddy Don Schlesinger, Mr. Rock Lobster. He never met an option he ever wanted to buy. So clearly he is not alone in that sentiment. All right, Uncle Mike, sir. Which of these bad boys, if you had to pick, gun to your head, you want a WWE for straddle for $7, a WYNN straddle for $12, a SeaWorld straddle for $2, or a Disney straddle for $5? I don't have the exact percentages outside of Disney, which is 5%. Any of these floating your boat, sir?
Well, me and Mark, 22-inch pythons, and with Uncle Mike Mania running wild, I got to go with WWE. Seeing as I don't really trade any of these, but I'll go with WWE. Why not? I'll honor all the past veterans and WWE Hall of Famers by going with that, seeing as I know nothing about any of these stocks.
Yeah, WWE, at least in the near term, was the one to pick. That thing has been on a freaking tear of late. Who knew that wrestling was where the dollars apparently were, and apparently still are, because this stock, again, up over 2x just in the last few months. So that $7 straddle may look rich now, but given where they've been of late, perhaps not so much. Mr. Rock Lobster, have you a choice here, sir?
I'm really thinking this is a tough one. Disney feels just dead. SeaWorld, maybe. I just don't see a lot of movement in that one. WYNN, there's a little bit of, I don't know. This is a tough one. I would say the Tesla one felt like a no-brainer last week just because it was a little squeezy and it just kept going up and up and up. This, I think, is harder. I think WWE is waiting for, a contract from somebody. So I don't know if the July – tough. I don't know. Okay, I'm going to throw my hat up and say I'm just going with the cheapest straddle. I'm just going to go with SeaWorld.
SeaWorld. There you go. Loving SeaWorld. Our audience is split as well. 40% for Disney, 40% for WYNN. WYNN has been moving of late. 20% for SeaWorld. No love for WWE, even though probably stock-wise it's probably the best performing name on this list, certainly for the last few months. This thing's been on a tear. So no love for it. Maybe, I think a lot of our audience was like me. They didn't even know it was public until not that long ago. Yeah, you're right. They're waiting for some big contracts there as well. Let's see if we can squeeze in some real quick comments here. This kind of goes along the line today. We saw Tesla rallying off some stock buybacks. This came in from Simple Trader the last time he bought back stock. He's saying Tesla's Musk sells $600 million worth of stock in 2016 and nobody bats an eye, but he buys back $10 million today. This was the last time he bought stocks a couple weeks ago, and everyone loses their S. So
their shiitake.
Yes, exactly, shiitake mushrooms. He has a point. Tesla tends to pump the releases for when Musk is buying stock. Not so much when he's selling 600 million. He actually highlights the trade here in this chart. He sold quite a few shares for $213 back in the day. Quite a few. So I don't have the exact number here that he sold, but quite a few. I think it's like close to a little bit shy of 2 million or 3 million shares. So. He dumped quite a bit, and yet now, of course, he collects 600 million. He buys back 25 million worth, and everyone goes crazy. It's enough to bump the stock. So there you go. I feel you there, Mr. Or Mrs. Simple Trader. Maybe not so simple after all. Interesting analysis, though. We got to keep on rolling into our final segment. It is time, listeners, to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we break down what the heck is on our radar for the rest of the old week, at least until the next time we all can gather here together today, listeners. And you're hearing some of that music because, of course, we're running up against it. So I'm going to let both of my cohorts also do their what's coming up with them as well. Starting with you, Mr. Uncle Mike. What are you watching for the rest of this week? And then what can they do when they head on over to St. Charles Capital Wealth Management? Easy for me to say.
stcharleswealth.com. Just watching the Twitter account from the president, seeing how the trade wars pan out, and then we kind of bumped out of where we have not broken out of the range, or we have not broken into the 280 mark in SPY. There was a dividend last week. Hopefully everybody got out of the money calls, and just looking to see where things go in terms of where people can go. We are doing a meetup on June 28th at my office. So for more information on that, go to meetup.com, St. Charles Investment Club. If anyone is in the area, you're more than welcome to attend.
Is that information on your website as well?
It is not at this point. So we're just sticking with that on the meetup at this point. So to meetup.com, St. Charles Investment Club.
Meetup.com, St. Charles Investment Club. You want to meet Uncle Mike in person? Maybe he lets you he buys you a Skippy Zero, and maybe he lets you use his bathroom. There are worse things in life than both of those. And last but not least, Mr. Rocklops, I know you're coming off the heels of your big Pro Trader Summit, but what else can we expect from the land of the pit, sir?
VXX Made Easy, our last class is tomorrow. It has been our best seller, even still now, even though the class is 3/4 done. People are still buying it just to see the videos. So lots of goodies with the class. People have liked it. So they're learning stuff. Also look for maybe, due to all the interest in options in Maine, I could be having a Portland option trading club similar to St. Charles. What the heck? So I get to talk to live people, once or twice a month. It would be great.
You should totally do that. I mean, Maine clearly the mecca for options interest in America, sir.
I don't know. I mean, is everybody just searching my name? That way that'll make my head nice and big, that everybody cares what I think about options. And the second part is look for our Options Made Easy series from Option Pit. This is us actually trying to, we serve the very high-end trader well, and we're trying to bring our vol message down to beginners. So it will be a great way if you really are confused about options to really learn how to look at them, trade them, price them, and think of how stuff is. But it's meant for basic beginners, which I've actually never done anything like that before. But I figure, heck, I'll give it a whirl.
Give it a try. Look at him. He's trying he comes out to the big city and he comes back full of an idea. He wants to meet people, see them in person in Maine. He wants to help beginner. Who is this rejuvenated rock lobster? I like it. Interesting stuff there. Check it out, listeners, optionpit.com. You too can learn VXX Made Easy. Maybe you're somewhere in the New England area. You want to meet the rock lobster yourself. We'll head on over. Maybe he can, maybe he will. If we prompt him enough, he will start up his Portland meetup group. And then you too can learn all about VXX and all the other fun stuff. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank you for downloading, streaming, subscribing, all the other fun stuff that you do. We'll see you back here from the Southern studio later this week. Oh, that got loud. We'll see you back here from the Southern studio later this week for more Option Block, maybe some more fun surprises, and we'll see you then.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.